Assalamualaikum, my name is Akisina binti Asnaniza and my student ID is 2025138101. As for part A, I'll be explaining briefly on Mfrs 8 operating segment. As for its scope, it's specifically for the separate or individual financial statement of an entity or the consolidated financial statement of a group with a parent, which firstly, whose debt or equity instrument are traded in the public market, or secondly, that files or is in the process of filing its financial statement with the Security Commission or any other regulatory organization for the purpose of issuing any class of instrument in a public market. As for its objectives, it enables users of its financial statements to evaluate the nature and its financial effects of the business, and it also identifies the activities it engages and the economic environments in which it operates. So what is operating segment? It engages in business activities from which it may earn revenue and also incur expenses, whose operating results are reviewed by the Chief Operating Decision Maker (CODM) to make decisions about resource allocation and performance assessment, for which it may separate financial information available. So as for the next part, I'll be explaining briefly on Chief of Decision Making (CODM). So what is CODM? It is a function rather than a designation. It can be an individual or a group of individuals, which consists of CEO, COO, or other group of directors. So CODM allocates resources and assesses the performance of the operating segment of an entity. So segments results are reviewed by CODM to ensure that financial users have the same information available to CODM. Thus, they both have the same conclusion. There are two examples of CODM in AirAsia. Firstly is Tan Sri Tony Fernandes, who is the CEO of Capital A AirAsia. He oversees the whole company, not just about airlines. Secondly is Bollingham, who is the group CEO of AirAsia Aviation. He runs the AirAsia airline operations and also leads all the AirAsia airlines. That is all from me.
Next, my name is Nurkasi Alisa binti Narmukminin and my student ID 2025300985. Now, let's look at how Capital A Berhad organize their operations. So there is two types of segmental reporting, and the first one is geographical segments, okay, where it divides the company operations by regions or countries where it earns revenue or operates its assets. So by doing this, it brings several benefits. So the first one, it helps the company to identify key customer group in each area, for example in Malaysia, in Indonesia, or in Philippines. Second, it also allows them to plan routes and service efficiently. Okay, this is to ensure that product and service reach customer on time. And lastly, it helps the company to understand and follow customer lifestyle. So offering can be tailored to local preferences. So in short, organizing by region or country makes a company more efficient, customer focused, and adaptable to different markets. Now we move to second type of segmental reporting, which is business segment. So business segment is a component of a company that provides group of related products and service. Business segment also face different risks and return compared to other segment. So organizing operations into segments also brings several benefits. The first one, it helps the company to grow sales and stay competitive by focusing on specific market. It allows them to serve different customer needs more effectively, and it enables the creations of better and more tailored service. So in short, using business segment helps a company be more focused, competitive, and customer oriented. So if we look at the table or snippet that I provide, here are the example of business segments that Capital A Berhad do, which is aviations, teleport, engineering, and AirAsia Move. That's all from me.
We move to the next slide, which is key benefits of segmental reporting. My name is Irdina Nabila bint Amirul Hafiz. On this slide, we look at the key benefits of geographical segment reporting, specifically how it helps in assessing market exposure and risk. Firstly, it allows users to assess market exposure and performance in different regions, so we can see which countries contribute the most. Secondly, it helps evaluate risks that come from different economic conditions or regulations across countries. And thirdly, it shows how diversified the company is across multiple markets, which is important for reducing overall risk. We look at to the snippet for financial year 2024, the highest revenue comes from Malaysia, which increased by 24%, showing that strong performance and stable market demand. The highest change is from Thailand, which increased by 167%. This big increase benefits users because it shows strong market opportunity and growth potential in Thailand. On the other hand, the lowest change comes from the other segment, which dropped by 55%. This decline benefits users by helping them identify markets with higher risk or weaker demand. Overall, this segment helps users understand where the company is performing strongly and where the risks are. This slide focuses on the key benefits of business segment reporting, which gives better insight into performance drivers. First, it allows users to see the performance of each business line, such as aviation or engineering. Second, it helps investors understand how management allocates resources across these segments. And finally, it increases transparency and decision usefulness, which aligns with MFRS 8 objective. From the snippet, the highest revenue comes from the aviation segment, growing by 39%, showing that aviation continues to be the main performance driver for the company. The lowest revenue is from AirAsia MOVE, which decreased by 19%, reflecting challenges and lower contribution to overall performance. This breakdown helps users see which business segments are driving growth and which may need management attention.
My name is Farzana Izzati Wirai binti Muhammad Fauzi. My student number is 2025-118613. I'm going to talk about MFRS 134 interim reporting. MFRS 134 objective is to set the minimum content, also the principles for recognition and measurement for interim financial report. It is to improve the ability of investors, creditors, and others to understand an entity's capacity. For its scope, this standard does not mandate which entity should be required to publish interim financial report, how frequently and how soon after the end of the interim period. It is usually decided by the governments, securities regulators, stock exchanges, and accountancy bodies. As for publicly traded entities, Malaysian Accounting Standard Board encouraged them to first provide interim report at least for the first half of financial year, and second, to publish it within 60 days after the period ends. Moving on to its definition, interim period refers to a financial reporting period shorter than a full financial year. Meanwhile, interim financial report represents report prepared for that period, which can include either a full set of financial statements, as in FAR570, or a condensed version following this standard. Next, I will explain about significant events and transactions. The first one is the acquisition and disposals of the items of property, plant, and equipment. This will impact statement of financial position and cash flow statement. According to MFRS 124, it is disclosed to inform users about the changes in entities' operating capacity and capital structure during that period. Referring to AirAsia financial statement, the increment of property, plant, and equipment showing it increases of its long-term asset and support future growth. Since there is no disposal or write-off, the increment is entirely from the new acquisition. Second, commitments for the purchase of property, plant, and equipment. This represents contractual obligation for future acquisitions that are not yet recognized. In line with MFRS 124, it is disclosed to indicate future cash outflow and capital expenditure obligations. Referring to AirAsia financial statement, it shows additional aircraft orders or changes in contract value, which reflects AirAsia strategic investment for fleet expansion.
My name is Nur Alia Damia binti Muhammad Syafuddin and my ID number is 2025-129313. For the question 3, we analyze Capital A Berhad's interim report for the third quarter of 2024 and identify the current and comparative interim reporting periods in accordance with MFRS 134. MFRS 134 of interim financial reporting requires company to present financial information for the current interim period together with the corresponding comparative period. This ensures user can compare performance, final position, and cash flow consistently between periods. From Capital A's actual Quarter 3 2024 interim report, we summarize the reporting period into the table shown here. For the statement of financial position, the current date is at 30 September 2024 and the comparative figure are as at 31st December 2023, which is the previous audited year end. Next, for the statement of profit or loss and other comprehensive income, Capital A present the quarterly result from 1st July to 30 September 2024 and the year-to-date result from 1 January to 30 September 2024. The comparative period follow the same structure, 1st July to 30 September 2023 and 1st January to 30 September 2023. Other than that, for the statement of cash flow and statement of changes in entity, Capital A reports the 9-month period from the 1st January to 30 September 2024, with comparative covering the same 9-month period in 2023. This format is typical because these two statements are usually presented on a year-to-date basis. All of this reporting period follow the requirement of Mfrs 134, which states that interim financial statement must include the current period and the immediately preceding comparable period. This ensures transparency and allows stakeholders to evaluate Capital A's performance, trends, liquidity movement, and financial position over time. Here, we show an extract from Capital A's interim report as evidence. You can see the financial statement heading clearly displaying the dates unaudited as at 30 September 2034 and audited as at 31st December 2033. This support the reporting period shown in our table and confirm that Capital A complies with Mfrs 134 in presenting both current and comparative interim information.